Mortgage Talk is on, where you receive good information for your mortgage needs, such as mortgage programs and foreclosure programs to help get you out of foreclosure. Stay tuned and hear what's coming your way. There's no place I'd rather be. Standing up beside you, my man. Your love always comforts me. So thank you for being a friend. Yeah. Over and over again. I can never repay. Love is something I wait, yeah. Something else I wanna say. What's happening? And welcome to Mortgage Talk. How you guys doing out there? Wow, we are live. We are here. We are live. We are here. We are on live screen here, and this is why I got the live chat thing open. Yeah, we're live. We're right here, man. Glad to see you guys. Welcome to Mortgage Talk. What is happening with you out there in Mortgage Talk land? I guess I can say that. I'm trying to get situated here, and glad that you guys have joined me here. I just came in, just sat down right here. So, what's happening? How you doing out there? This is Mortgage Talk. I'm Rick Montgomery. Glad to be here with you. It's I'm not sure. Do we want to do it this way, or do we not want to do it anyway? Is there any particular way that we want to do this? Is this a good way to do it? Let's see. Let's see how we can do it. Okay. I think this now. This is a broadband. We are so broad in here. You can see a lot of what we have here. Okay. Okay. I think we have it here. Welcome to Mortgage Talk, everybody. Rick Montgomery doing here with you, making some adjustments sets here. Okay. Yeah, I think we have it. I think we can do that. Okay. I am here today to talk to you guys. Glad you're here with me. I'm here today to talk to you about reverse mortgage. And I want to share with you some information about reverse mortgage. There's a lot of misconception about reverse mortgage, and yet reverse mortgage still continues to grow to be a very, very, very popular program for senior citizens. Now, I can't disqualify myself in that. I don't feel that old, but I can't disqualify myself in that. But I just want to share with you some information that could bring about a better understanding in the procedures of reverse mortgage. It is indeed a good, well monitored program. It is not designed for you to lose your home. It is not designed to take homes away from senior citizens. And it is not designed to get you to take money out and blow it up or do whatever you want to do. It's designed to give you an opportunity to be able to do the things that you want to do or add to some of your income that may not be enough income for you. Hold on one second. So, it is not designed for you to take the money and do something that you probably wouldn't do. Okay, It is designed for you to think on what you want to do with this and have some ideas of how you're going to manage this. Now, I'm gonna go over some things with you that I think that will help bring about a better clarity of reverse mortgage. It is indeed a good program. Okay, so let's get started on this. All right, I'm going to give you this. In the process of going about reverse mortgage, I got a question that came in today, and I want to very touchily. It is a lead to lead into me talking about reverse mortgage. And the question that I got is, what is one of the best programs that not me personally, but you, in speaking in terms of the individual, the young person, what is it that, or what is it, or where is there a good program for first time home buyers? Because everybody that I talk to is talking about different other lenders that have first time home buyer program. Well, here's what I'm going to talk about very briefly, just for you, and then because it's going to lead me right into reverse mortgage. FHA has one of the best first time buyer programs. FHA program is easily designed for first time home buyers. It's not necessarily set for the focus of only first time home buyers. It's set for the focus for people who are looking for the American dream, who has low credit scores, who don't have 20% to put down, but they want to get the American dream. And so the program that FHA designed, it is one of the best programs and is a great program for first-time home buyers. So FHA loan has helped so many people become homeowners since 1934. How do we do it? Well, I tell you how they do it. I don't want to take credit, but how they do it. They say, well, the Federal Housing Administration, which is FHA, they are a part of HUD, insures the loan so that the lender of your choice can offer you a good deal. And they take away the fear that some lenders may have when they look and see that the asset of what this young people may have, it's just not enough in their eyes. But having FHA stand behind you, standing with you, and say, we're going to insure this loan. And if they default, we have their back. We have programs set up that along the line, if they do fall down on a mortgage, which is not something that many people think about when they go out to purchase a home. They don't think about, oh, I might fall down on the mortgage. That's the furthest from their mind. But if you do, FHA got your back. Okay. They have workout programs to offer to you to assist you. For the lender who was a little hesitant, but knowing that FHA is going to insure the loan, it leaves them free and clear to say, well, we can offer them a loan. And then FHA says, we're going to offer them a loan at the going interest rate. So we set the standards of a credit score of 580. And since that lender may become that servicer, meaning that they may service the loan, we'll give them a few leverage for where they could say, well, we want you to have a 620 score or a 640 score, but understand that in the process of this being in the mix, it's the FHA guidelines that they're going to stay within. Okay, bottom line. So, what can FHA do for you? Buying your first home, FHA just might be what you're looking for or what you need as a first-time home buyer. Your down payment can be as low as 3.5% of the purchase price. And FHA will bring 86.5% of the loan to the table. Type of properties that's available? Well, it could be a 1 to 4 unit building, a single family home, a condominium. Okay. These are the type of property that you can obtain from FHA and get that low score. And usually they're going to be within a quarter of a point with one of the lowest scores. Okay. So you can get low interest rate. Interest rate is out here right now and it's low. This is the best time to buy a home now. Yes, I've been telling you that the other shoe is dropping and it's coming down. Take advantage of this. This is the best time to do refinancing, and this is the best time to buy a home. Why is the best time to do refinancing? Because you can get a lower rate. What rate are you in right now? Are you at 4.75? Are you at 5.25? Are you at 6.10? If you're at any of these rates, it is the best time for you to get the rates in the twos. Do you know how much hundreds of dollars you're saving? It is now the best time because the time is coming. When the other shoe falls and the foreclosures starts to happen, you're going to be able to say, oh man, I should have took advantage of that. So now's the time to take advantage of FHA. First time home buyers, great opportunity for you to take advantage of it. Okay. What's the qualification? Be a human being and be a citizen. That's the qualification, really. And be able to have the ability to pay back the loan. That's the other qualification of it. As long as you meet those particulars, you can qualify for an FHA loan. Yes, can one or two people buy? Yes, you can. Yes, you can. Yes, you can. You want more about the FHA loan because it can go up to over 100, over to 800. What is 868,000? It can go that high. That means when you're looking at 600,000, 700, and 800,000, usually that falls into the jumbo category, the jumbo loans. Well, now you can have one place to pay and can qualify for a $725,000 house. And you can get this under FHA. Interesting. Making the comparison. Okay, got to move on. Want to lead into talking about financial help for senior citizens. Talking about reverse mortgage. Because are you 62 years of age? Raise your hand. Do you live in your home? Do you own it outright? And I'm talking about your home. Do you have a low balance that you owe on your home? Now, if you answer any one of these questions and you said yes to any one of these questions, then FHA, reverse mortgage, just might be what you are looking for. But you're a little hesitant because you haven't quite grasped the understanding of it. Well, it lets you convert a portion, the reverse mortgage do, it lets you convert a portion of your equity into cash. It lets you convert a portion of your equity into cash. Reverse mortgage are increasing in popularity with seniors who have equity in their homes because they've been paying on it for years and decades. And want to supplement, the seniors want to supplement their income. I'm retired. I get XYZ from Social Security. It's just not quite enough. I've been hearing about this reverse mortgage, but I don't still quite understand. So when you're able to get the FHA reverse mortgage, because we're going to talk about qualifications and home qualifying for it, because it's important for you to know as an educated consumer, the best customer, you're going to be able to decide, is this the loan that you're looking for? Because you have so many ways, oh man, so many ways to be funded from this program. And so you're going to be able to decide whether you're going to qualify for this program and is this the right program for you. So let me just say this. Reverse mortgage insured by the U.S. federal government is called a home equity conversion mortgage. Let me say this again. Reverse mortgage. It is insured by the United States federal government. It's called a home equity conversion mortgage. The acronyms that you're going to hear me refer to throughout this broadcast is HECM. That's the acronym. HECM, which stands for Home Equity Conversion Mortgage. Okay? And it's only available through who? FHA approved lender. That is what it is approved through. FHA approved lenders. The HECM FHA reverse mortgage program that enables you to withdraw a portion of your home equity. The amount available for withdrawal varies among borrowers and depend on the age of the youngest borrower or eligible non-borrower spouse. Follow me on this. Current interest rate you will receive under this program, because it's an FHA program. An appraisal will be used to appraise the property. It will be an FHA appraisal, which all FHA appraisals are FHA inspectors too. Okay. Now you can get a lesser of the appraised value or FHA mortgage limit or the sale price. Let me say that again. An appraisal will be called. Now you can get lesser of the appraised value or FHA mortgage limit or the sale price. Think about that. Hold that thought. Now, you're thinking on this thought here. If there is more than one borrower, and in most cases, there usually is the husband and the wife. Sometimes there is a combination of four people that could be involved in the ownership of the home. And as they get older, they all transition into one location, and it keep each other company in that one location because they all work together. Okay. So if there is more than one borrower and no eligible non-borrowed spouse, the age of the youngest borrower is used to determine the amount that you can borrow. Now, you can also use HECM to purchase a primary residence. Did you hear what I said? You can also use the HECM to purchase a primary residence if you are able to use the cash on hand to 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 pay the difference of it uh when you're looking to purchase this home between the HECM proceeds and the sale price plus closing costs for the property you are purchasing. Did you get that? You can take the funds that you receive from reverse mortgage, and if you're interested in buying another property, maybe you want to get something for your daughter, maybe you want to get something for your mother to have her close to you. Maybe there's a good deal down the road that where you can go there, and because it's surrounded by the lake, and you can pull up your boat and you can do whatever it is. It depends on where you at. Whatever it is, you can take those funds and you can utilize those funds. And if you're short in the shortness of it, you can take some of your own personal funds and take that fund and purchase another property. Are you with me? Or am I by myself? I heard a wise man say. That's what you can do with the funds here under the reverse mortgage program. Now, how does the HECM program work? I'm glad you asked that question because I was giving you some of the highlights. First, you must meet with a HECM counselor to discuss the program, the reverse mortgage program. The counselor's job is to determine through questioning, and are you eligibly required? I mean, are you eligibly qualified? And have you met the eligible recommend recommendation. Have you met what they're looking for? Okay. Have you met the eligible requirement and the financial implication and the ability and sound-minded to be able to repay the loan? The counselor will also discuss provision for the mortgage becoming due and payable. Now, you can search for a HECM counselor when you make your mind up, yeah, this is for me. The reverse mortgage is for me. You can meet with a counselor, but I don't know where to go. Well, you can go online and just type in FHA counselor, or you can call 800-569-4287. 800-569-4287. Now, there are borrower or borrowers and property eligibility requirement that must be met. If you meet the eligibility criteria, you can complete a reverse mortgage application by contacting FHA approved lender. You can search online for a FHA approved lender. The lender will discuss other requirements with you that set forth in the program for the HECM, such as your first year payment limitations, available payments options, loan approval process, and replacement terms is what the lender will go over all that with you. Or a representative will go all of that with you. Now, the borrower's requirement, you must be 62 years young or older. The owner, the said owner of the property, must own the property outright or pay down a considerable amount of what you own. Occupy the property as your principal resident. Not be delinquent on any federal debt, and have financial resources to continue to meet timely payments of ongoing property charges, such as your property tax, the insurance, and if there is any HOA fees, that too. And you know how I feel about HOA, okay? Just thought I had to share that out with you. The property requirement, okay, enables property type must meet all FHA properties, standards, and flood requirement. The reverse mortgage will cover single family homes, 2 to 4 units, and 2 to 4 unit homes with 1 unit occupied by the borrower. That must be a must. HUD approves the condominium projects. Individual condominium units that meet FHA's single unit approval requirement, manufacturing homes is included. They meet, as long as they meet FHA guidelines, they're approved. Okay. What are some of the financial requirements? Okay. Income asset, monthly living expenses, and credit history will be verified. Timely payment of real estate taxes, hazard and flood insurance premiums will be verified. You see, a lot of people's homes is paid for. There is no escrow. So they got to pay their taxes themselves. Are you up to speed? Because they're going to check. Okay. Have you paid your water bill on time where there's no lien against you because you didn't pay the water bill? Okay. Do you have property insurance? That's a must. That is a must. Are you behind on your real estate taxes? That's another deeply concern that they want to hear and they want to know. And if you own your home free and clear, they're going to check to make sure that when you paid your property tax, it was paid on time, that you know, didn't just forget about it. Okay. These are the things that they are requiring for them to know. Property requirement. Eligible property that must meet all FHA property standards and flood requirements. Single family homes, that's 2 to 4 units with 1 unit occupied by the borrower. That's a must. HUD approved condominium projects, individual condominium units that meet FHA single unit approved requirement, manufactured home that meets FHA requirements. Financial requirements, income, asset, monthly living expense, and credit history will be verified. Timely payments of real estate taxes and hazard flood insurance premium. You're going to have to prove that you got that if you live in a flood zone area. Okay. Following the plan that you can change. Interesting. Follow the plan that you can change. For an adjustable interest rate, the one of the plans is known as a tens, tens, tensure, tensure plan. That's when the equal monthly payments, as long as at least 1 year the borrower lives and continue to occupy the property as a primary residence. So you can get someone to come stay with you, and for whatever reason, if they're on the loan, the one of the plans that you can choose from, and this plan is called the Tensure plan. The next plan is called the Term plan. And what that plan is, what is the reverse mortgage term plan? Well, that's an equal monthly payment for a fixed period of the month. An equal monthly payment for a fixed period of the month. What is the line of credit payment? Unscheduled payments or installment. And at the time, in a amount of your choosing a a unscheduled payment. Let me just start over again. A line of credit, a unscheduled payment, or an installment, which is an installment payment at times in an amount of your choosing until the line of credit is exhausted. Modified texture. Combination of a line of credit and schedule monthly payments for as long as you remain in the house. You have to occupy it as your primary residence. Modified term. Combination of a line of credit plus monthly payments for a fixed period of the month, selected by the investor. For the fixed interest rate, mortgage, you receive the single disbursement lump sum. Let me say that again. If you're looking for a fixed interest rate on the reverse mortgage, you will receive under that umbrella, you can receive a single distribution lump sum. Not every month. Here it is. This is the money that you want to pull out. We don't have to disperse that to you in different lumps. We're going to give it all to you at one time. But you got to be under the fixed interest rate program in order for you to get that. Plus qualify, of course. But you got to be under the fixed interest rate program. Okay? The mortgage amount is based on what? Good question. The age of the youngest borrower or eligible non-borrower spouse, current interest rate, and appraisal value will be pulled. The HECM FHA mortgage limited, the amount of the loan, it dropped down. The HECM FHA mortgage has the highest loan amount that they would lend, which is $765,600 is what they will lend out. That's still a lot of biscuits. That's still a lot of biscuits. Wow. 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 Now, the Heathcliff FHA Mortgage Limited, as I mentioned, the dollar amount cap at $765,600. The sale price, if there is more than one borrower on the property and no eligible non-borrower spouse, the age of the youngest borrower is used to determine the amount you can borrow. Whoa, holy cow. The HECM cast? No, it's not a cast, it's the cost. The HECM costs, you can pay for most of the cost of the HECM by financing them and having them paid from the proceed of the loan. Financing the cost means that you can not have to pay for or to pay out of pocket. On the other hand, financing the cost reduce the net loan amount available to you. Say that again. You can pay for most of the costs of a HECM by financing them and having them paid from the proceed of the loan. Financing the cost means that you do not have to pay out of your pocket. On the other hand, financing the cost reduce the amount, the net amount of the loan that's going to be available to you. The HECM loan includes several fees and charges, which includes the mortgage, the insured premium, third-party charges, origination fees, interest, and don't forget the servicing fee. And lenders will discuss which fees are mandatory. You will be charged an initial mortgage insurance premium. You will be charged a PMI again at closing. The initial PMI will be 2% over the life of the loan. You will be charged an annual mortgage insurance principal that equals 0.5% of the outstanding mortgage balance. The MIP, you will incur costs of FHA mortgage insurance. The MTG, which is stand for mortgage, insured guarantee that you will receive or expect a loan advance that you can finance the mortgage insurance premium as part of the loan. Third party charges. Closing costs from a third party can include an appraisal, the title search and title insurance, survey, inspection, recording fees. Let me stop. As you will incur closing costs, third party charges, closing costs from a third party can include an appraisal, a title search, surveys, inspection, according recording fees, mortgage taxes, credit check, or other fees, origination fees, you pay organization fees to compensate the lender for the possession the origination fees can be set for either one flat fee of $2,500 or 2%. And I'm talking 2% of the first loan amount that I'm giving you this as an example, 200,000. Home value plus 1% of the amount of 200,000. The HECM will charge an origination fee. Wow. Then there's a service fee that you'll be charged a service fee, and that usually be in the range of about 30 or $35. The service fee will be sending you updates on your account that you can keep up with.